Okay, it's Joanne Musa, the Tax Lien Lady, and we're live on Facebook. Nicole, I don't think Nicole is here yet. Nicole should be coming today. And I hope we're also going to be streaming into the Investing for Success group. So I got to check that with Nicole when she gets here. Hey, Nicole, are we also streaming into the Investing for Success group? Can you let me know? Because I did let everybody know that's in that group that I still have behind me my notes from the 5-day challenge that we did last week. So I just want to make sure that the people that might be in the group can see this. Okay, thank you, Nicole. Nicole's going to be streaming this also into the Investing for Success group. So you guys that are on my business page watching now, or going to be watching shortly, or going to be watching the replay, well, by then you won't get the chance to ask me this live. But if you have questions about what we covered in the 5-day challenge, and I have some of the notes behind me, we did have a couple of guests on the 5-day challenge. We had Dan Mangena on the first day talk about using your money DNA to create wealth. And then I had on last Friday, I had Kirk Chisholm from the Money Tree podcast. And he was talking about the economy. Because one of the other things that we did over the last 4 days of the challenge, we talked about a book that I've been studying, 5 Wealth Secrets 96% of us don't know. And we went over those 5 secrets. And you can see them right here behind me. Use jars, focus on vision, invest in multiplication. And that's where tax lien and tax deed investing comes in, right? Anticipate economic cycles. And that's where Kirk came in talking about the economy and where we are in economic cycles, because what Kirk said on Friday is that these cycles repeat every 100 years. Okay, you've got repeating cycles because they are fueled by fear and greed. Okay, so that was a really great session that we had on Friday. And then leave an inheritance for 2 generations. And we talked in the, if you got the VIP access in the Q&A, we talked about 2 ways that you could do that. One of those ways is with a infinite banking life insurance policy. Another way is with a family trust, okay? Ways that you could leave an inheritance for 2 generations. But you know what? You can't do this, all right? Unless you do this. Just like you can't, I mean, a lot of people did all these things and they invested in multipliers. They might have invested in real estate and made a lot of money, but they didn't anticipate the economic cycles and they lost it all, okay? So you've got to do all of these things to be wealthy and stay wealthy and leave a legacy. Okay. All right. So let me see. Okay. So we've got a few people here live with us. Let me know where you're from, what state you're in, and let me know what your questions are. I can see if you're on the Facebook page, I can see your comments. But if you're in the group, in the Investing for Success group, Nicole, I'm going to rely on you to let me know if people have questions and are putting them in the comments there in the group. Okay, because I can only see the comments from the Tax Lien Lady business page on Facebook. Okay. All right. So let me know who's here. Say hello in the comments in Facebook because I'm actually not on Facebook, so I can't see who's here unless you put a comment, because I can see the comments that are on the Facebook page. Hi, Emma from Maryland. Okay. Kenny, hello, Kenny from Indiana. Indiana is one of my favorite states, Kenny, for tax liens. Who got my newsletter today? Who got to read my newsletter today? Because in my newsletter, I talked about one of my favorite tax deed states, my favorite tax deed state that is online tax deeds. Okay, that's in my newsletter. And if you didn't get it, that means you're not on my list because it went out today. All right. If you are on my list and you didn't get it, check your junk mail. Okay. And hello, Diva from New York. And New York is one of my favorite states too, for actually isolated tax liens. New York is a deed state. But if you know what to look for, you could find tax lien sales. I'm not talking about Nassau County. I am not a fan of that sale. I've never been to that sale because it's super competitive. But there are other little known sales in New York that I like. All right. So Emma is asking, how do we get on the list? Nicole, can you put in and Emma must be on the business page. So can you put in on the comments there how they can get on the list? Oh, okay. She put a link right in for the newsletter to get the newsletter. And that will get, and you'll get, once you get on my list, I got to warn you, you're going to get a lot of emails from me, especially today. I'm sending out a lot of emails because today is the last day for a couple of things. It's the last day that you could join the Investing for Success Facebook group and get the replays of the Ride the Waves 5-day challenge that we did. We're taking them down at midnight tonight. They're only 30 minutes each, so in 2.5 hours, you could watch the whole thing, but they're coming down tonight. Now, if you're not already in that private group, you could go to not taxlinglady.com, Facebook, it's a Facebook group, facebook.com/groups/investing for success. And Nicole can put that in there too for anybody that's not in that group. Now, before we let you into that group, you have to agree to the terms and answer the questions. We just want to make sure that people are there to learn and not solicit everybody else that's in there, right? Or not spam everybody. So you just have to answer the questions. We'll let you in, and then you can look for the videos that are there and watch all these trainings. Now, somebody did ask, and Emma also asked me to go over these 5 things, and this is what we covered all last week, guys, okay? So I'm not gonna go into them in depth, but watch the videos. All right, the first one is use jars. And what the author of that, and I don't have that book in front of me now, but I have another book by the same author, which I also recommend, Wealth, Riches, and Money. This is by Craig Hill and Earl Pitts. Wealth, Riches, and Money, God's Biblical Principles of Finance, okay? Both of those books, this book and 5 Wealth Secrets 96% of Us Don't Know. And the book is the 5 is spelled out. It's not the number 5, it's the word 5, Wealth Secrets 96% of Us Don't Know. You could get both of those books from Family Foundations, familyfoundations.com. And Nicole can put that in the comments for you too. All right, so I recommend watching those videos, and I recommend the books. I don't make anything on the books, guys, okay? And I also talked about those 2 books in the newsletter, okay? And also, if you didn't get the newsletter, Nicole, why don't you put that link, that Amazon, if you could find that Amazon link that goes right to the newsletter, let's just put it in here so they could just download the newsletter right from here. And she just put the link in there for familyfoundations.com too. All right, so the first one is use jars. And what the author recommended is, and what this means is have different bank accounts. Don't put all your money in one account, because then what happens you spend it all, right? So he recommends that you have 5 jars. And the nice thing about the book with that same name, 5 Wealth Secrets 96% of us don't know about or don't know, it kind of reminds me of Robert Kiyosaki's Rich Dad, Poor Dad. It's actually a story. It's a story about a boy named Isaac. And it starts when he's 10 years old, and his father teaches him how to manage his money when he's 10 years old, okay? And as he's growing up, it goes through his life as he's growing up and what he learns through his life. It's kind of like Rich Dad, Poor Dad, only he only has, let's say, a rich dad or a wise dad, okay? And he has poor friends who don't have wise dads like him, okay? So it's kind of like that, but it's really good. I highly recommend it. So the first thing is he recommends that you, now how Isaac started, he actually had jars, and his dad gave him a $10 allowance, and he put money in 5 jars, okay? But what you could do is have different bank accounts, 5 different bank accounts. And if you read the book, at the end of the book, in the beginning of the book, you know, we're talking about a kid who doesn't have a lot of expenses. But at the end of the book, the author gives what he thinks is a good percentages to put in each jar and what each jar is for, okay? Which are the same things that Isaac uses his jars for, but they're just different percentages for adults that already have expenses, that haven't done this yet, okay? So that's what this first one is about, use jars. It's actually have different bank accounts, 5 different accounts, you know, whether they're checking or savings accounts. All right. Then the second one is focus on vision. Because here's the thing, everybody worries about provision. In other words, I'm not gonna, you might be waiting for money or waiting to have the time to do something, right? You're waiting for the provision before you go do what you wanna do and have what you wanna have, okay? That is the have, be, or have, do, be mentality, okay? I gotta have this, I gotta have the time, I gotta have the money before I can do what I wanna do, before I'll be who I wanna be, all right? You gotta change that mentality. It's be, do, have. Who are you going to be? So you gotta focus on your vision. What do you want? What do you really want? What are you here for? Right? What is your God-given purpose? And how can you live that? Don't worry about how you're going to do it so much. Don't worry about getting the provision comes when you got the vision. So you got to get the vision. So that's what this number 2 is about. And then 3 is invest in multiplication. You got to invest in things that multiply, right? And that's where tax liens and tax deeds come in. And there are other things that you can invest in, like real estate, that multiply, all right? And then anticipate in economic cycles, which we already talked about a little bit, and leave an inheritance for 2 generations, which we already talked about a little bit, right? Okay. So let's see what questions we got. And thank you, Nicole. Okay, so if you guys that did not get the newsletter, Nicole put a direct link for the newsletter. Now, I suggest that she also put a link in earlier to sign up to get the newsletter, to sign up for future newsletters. Now, you could sign up today, but this month's newsletter already went out. So if you sign up today, you're not going to get this month's newsletter. That's why Nicole put that in there for you. She put that link in there for you that goes directly to the newsletter. That's the last one that she put in the comments. Okay, now the ugly looking link, the other ugly link that she put in earlier, all right before she put in the one to the family foundations, she had put in another link. That's so that you could sign up to get future newsletters. Okay. All right. All right, guys. So what other questions do you have for me? What can I help you with? I'm going to take a sip of water while you guys think about it, because look, I'm here to answer your questions. All right, Diva, I want to ask about an LLC that I opened a few years ago. I didn't do the publication requirement. Can I still use it? If I move to another state, is it better to do the publication requirement in the state I moved to? I understand that it's better to buy tax deeds with an LLC. That is not true. Is there less of a need for an LLC with liens, any specific type of trust to do RE investing with? Okay, Diva, let's see. What state are you in? New York? Here's the thing with an LLC. You don't need it for liens. And if you do have one for liens, some states are going to require you to register your LLC in their state. So you have to register your LLC as a foreign entity in their state. So you're going to have to pay again. Now, I don't know about the laws in New York. Where I am in Pennsylvania, I don't have to do any publication requirement. In Pennsylvania, you just register your LLC and that's it. Now in New Jersey, you have to file something every year. You have to do something every year. In some states, you have to file something every year. But I don't know what the laws are in your particular state. So you would actually have to talk to your CPA about that or your attorney. That is not my area of expertise. I do not invest in an LLC. Sometimes I do. I have invested in tax liens in an LLC, in my own name, my husband's name, a trust, and a limited partnership. I've done all of them, okay? I've done it also in a self-directed IRA, but when I've done it in a self-directed IRA, that was either for a fund or for secondary liens. So that's a little different. It wasn't directly in the auctions. Okay, because it's a little tougher to do it in your self-directed IRA directly in the auctions unless you have the right custodian that gives you checkbook control. So when you buy property, you can buy properties in an LLC, actually buy the deeds in an LLC, but you don't have to. You can buy the deed in your name and then transfer it to the LLC. Or you could buy the deed in a trust. That's probably the best way to do it. But these are all questions that, because it's different regulations in every state, these are questions that are best to ask your CPA. Okay, because I don't know about New York LLCs and what the requirements are. Yeah, and it's easier in some states to invest in tax liens in your own name, not in an LLC. For instance, in Indiana, we have somebody here that's from Indiana. Well, because he is in Indiana, he could have an Indiana LLC and invest in Indiana. But when he does, each tax sale he goes to, he has to certify that his Indiana LLC doesn't owe any taxes. Now, he doesn't have to do that if he invests in his own name. Now, if you have a New York LLC and you go to Indiana, you're going to have to register your LLC to do business in Indiana, and then you're going to have to certify that it doesn't owe any taxes in that county. And that could take a couple of weeks. And, you know, if you've got to register for the sale, if you've got a limited time to register for the sale, because these tax sales usually have cutoff dates to register and get your deposit in that are ahead of the sale. So if you run up against something like that, it's just easier to invest in your own name. Okay, and because it's a lien, not a deed, you don't have to worry about liability. Once you get the property, if you actually get to foreclose on the property, then you can transfer the property into an entity. Okay, an LLC or a trust. Okay. So, Emma, did I answer your question? And I don't understand. Okay. Do you see that changing, meaning more as defaults and foreclosure? Okay. I kind of don't understand all of your questions here. In earlier broadcast, you spoke about tax liens in states that are easier to deal with. I thought you were talking about the LLC. So I think I answered that. Do you see that changing, meaning more as defaults and foreclosures ramp up? No, that won't change. I think you mentioned that the tax liens are announced since newspapers, I think in the past, these are being published on county websites. Okay, here's how I find out what tax sales are coming up around the country. I don't wait until they're published in the newspaper, because they only publish them 4 weeks before the sale. And sometimes these sales have cutoff points to register. If they're online, sometimes you have to register way ahead of time. So there's actually 2 ways that I find tax sales. If I know where the sales are being held, if it's an online sale and I know which online platform is doing it, I will check on the online platform. If I don't know, or if I'm just looking to see what sales are coming up, I use Tax Sale Finders. It's a website that lets you do a custom search to find out what tax sales are coming up around the country. And I make it available to my, my coaching clients and members of the Tax Lien Profits Accelerator with their membership and coaching. They get access to that. Okay. The free membership, I think they do have a free membership, but it does not give you access to doing the custom search to find out what tax sales are coming up around the country. Also, the other thing that they get access to is they actually get to look at the properties in the sale. They get to filter the list and look at the properties in the sale. Members of the Tax Lien Profits Accelerator get 15 property reports a month, and coaching clients get 50 property reports a month to actually look at the properties and the information on the properties in the sale, okay, to help them do their due diligence. So it's the easy button for tax liens, and it also has other things in it too that help, but those are the main things. And again, if you want to be a member of the Tax Lien Profits Accelerator, go to taxlienlady.com/membership. You can find out more about it. We're closing the doors at midnight tonight for at least the next 2 months. Now, one of the other benefits of membership is that you get access to most of my courses and all of my workshops. I have a workshop coming up the first week in August. There's a lot of sales that will be going on in August and September, so we'll concentrate on those sales in that Tax Sale Success Workshop. It's a 3-day workshop, okay? You get in free when you're a member. It's a $997 value for the workshop, but members get in free. Okay, you're welcome. All right, and Nicole has just put the link in there for you to find out more about the benefits of being a member of the Tax Lien Profits Accelerator. You could sign up monthly or for the year. I recommend yearly because you save over $400 over the year. It's like getting 3 months free. Okay, it is a better value if you sign up for the year. Okay. Any other questions? Is there anything that I overlooked? I think I got all the questions from Emma. And Emma, I'm not sure though that I answered all your questions, because the questions I answered about an LLC was from Diva. And I hope I'm pronouncing your name right, Diva. Okay. So I'm not sure what you meant when you said in an earlier broadcast I spoke about tax liens in states that are easier to deal with. Easier in what way? Okay, and Diva's asking me for a good state to start in, and you know what? That depends on you. It depends on where you are. And were you in New York? Let's see, because that's one of my favorite states, but there's little known sale. What I do is I help my coaching clients with the tax lien sales in New York that nobody else knows about. But New York can be a good place to start. So I normally recommend that you start in your own backyard. And it also depends on how much money you have too, where to start. Okay, Kenny's asking, can you explain the difference between the commissioner's sale and the regular tax lien sale? Yeah, sure, in Indiana, Kenny, sure. The regular tax lien sales happen in the fall in Indiana. Okay, there is a 1-year redemption period. If it doesn't get sold in the regular tax sale, the lien will get certified to the commissioner. And in the spring, the commissioner will have a tax sale. And all the liens that did not get sold, plus the ones from previous years that didn't get sold, will all go into the commissioner's sales. All right. But when they go into the commissioner's sale, 2 things happen. The redemption period is now only 4 months. And the opening bid, because in Indiana, they bid up the price of the lien. They bid premium. Okay. But the opening bid is lowered. Each county has their own minimum opening bid. I've seen it anywhere from $25 to $500 or $600, okay, depending on the county. So the opening bid is lowered and there is a shorter redemption period. That's the main difference, Kenny. Also, you need to get an attorney right away in the commissioner sales, because in Indiana, you, the investor, are responsible for notifying the owner of the property that their property was sold in a tax sale. In other states, the tax collector does that, but not in Indiana. You're responsible for notifications. They have to be done correctly. You need an attorney to do it. You need to hire an attorney. Now, if you buy in the normal sale, in the fall sale, the regular tax lien sale, you have to wait 30 days before the attorney sends out any notifications. But if you buy in the commissioner's sale, you can send those out right away. So if when I did buy in the commissioner's sale with one of my clients, the first thing, we got an attorney that day, and we took those liens right to an attorney as soon as we bought them, hired the attorney to do the noticing, okay? And by the way, I do have a done with you training for the Indiana commissioner sales. And I don't know if, Nicole, can you find the link for that training for Indiana? It's on taxlienlady.com in the done with you trainings. Okay. That's funny, Diva. You take all the pronunciations of your name. Okay. Yes, Emma, Maryland can be difficult. I suggest that, and it might be too late for this because the sale is coming up very soon. Check out the Washington, D.C. sale. They haven't had a sale in 3 years. It is live. You have to go live to that sale. I would check it out because the Maryland sales are pretty much done for this year anyway. Yeah, and Deepa says it doesn't sound great to be responsible for notifications. Actually, I like it because I just hire an attorney and the attorney does it all, and they also do the foreclosure. So that's why I like I like the Indiana commissioner sales, actually. And I have an attorney in Indiana that I use. And actually, he joined us for the Done With You training in Indiana. Oh, and Nicole put that link in there for you, Kenny. Yes, and I had an attorney join me for some of the calls for that training. And I also have a Maryland Done With You training for the Maryland tax sales, if you're interested in that, Emma. And I had real estate investors from Maryland join me on that call, or on that training, I should say. It was a 4-week training. Both of those were 4-week trainings. And I believe they're both $497 for those trainings. And I only have 3 Done With You trainings for Maryland, Indiana, and the other one is for Arizona. Arizona is not one of my favorite states. Out of the 3 of them, I like Indiana the best. Okay. But I do have a training for Maryland. And Nicole, you could probably find that link there too for the Done With You training for Maryland and put that in there. All right, any other questions? Great questions today, guys. Great questions. Oh, and Kenny is asking, what does the 4-week training consist of? Did you go to the link? Click on that link that Nicole put in the comments, and it should tell you there. It was actually training that happened while the sales were going on. So the only thing that changes every year is when the sales take place. And I update it each year with the dates of the sales. So right now, it would just have the dates of the sales for last year, because this year's dates aren't available yet. So later in late summer, we'll probably update that. The dates for the tax sales that are online. And that goes for the Maryland training also. The Maryland tax sales just ended, so it will have the dates of the Maryland and any like pertinent information for those tax sales will be on there for the coming year when those sales come up again, okay? But the actual training that's in there is from the last time that I did it. I only do it live when there is a major change that needs to be updated. Hey, Ray, good to see you here. And Nicole just put the link in there for the Maryland course as well. What is the typical cost to retain an attorney for notification in Indiana? Okay, here's the thing about getting an attorney for Indiana. Some of the counties won't even give you a redemption unless you can prove that you hired an attorney, all right? When you get the redemption, you get a certain amount of money back for your attorney. Each county has their own amount that they'll give you back. The attorney that I use charges a flat rate, which is probably a little more than you're going to get back in some counties, but it also includes the foreclosure. So if it goes through to foreclosure, you don't have to pay another fee for with the other attorneys. They're only going to charge you what the county will give you back, but then you're going to have to pay for the foreclosure at the end of the redemption period. And the typical cost is, I think at first it's like, for the attorney that I use, maybe $1,200 per lien. For other attorneys, it might be cheaper. It could be anywhere between $700 to $1,500 per lien, because that includes the attorney fees for doing all the noticing, and it includes they have to do a title search. It includes that as well. Okay. Any other questions? Great question. Kenny, great question. Yeah, and you know what? The attorney that I use goes through that, goes through the entire process in the training, in the Indiana Done With You training. He explains the entire process. So why do I like Indiana? Because it's a 4-month redemption period. It's a short redemption period. That's what I particularly like the commissioner sales, because of the short redemption period. And the other thing I like about Indiana is you get interest or a penalty on everything that you pay. Right? Because in some states you pay premium, but you don't get any interest on your premium or a penalty on your premium. In Indiana, you do. You are reimbursed, Eva. You are reimbursed. It's just that you're not reimbursed the full amount. I'm doing a foreclosure right now in New Jersey, and I had to hire an attorney for the foreclosure. And I don't get reimbursed the full amount if it redeems at some time during the foreclosure. I get reimbursed a certain amount. It's not going to cover all of it, but it covers most of it. When it's all done, I'll probably have paid like $2,000 for the attorney. I paid $1,200 up front. And then as the attorney has to do more notifications and more stuff, they charge you for that. By the time it's done, it'll probably be like $2,000. I'll get back like $1,350, something like that. So I'm not going to get the whole thing back, but I'm going to get some of it back. But the whole thing is, if it doesn't redeem, I'm going to get the property. So why wouldn't I want to do that? Why wouldn't I want to do that? It's part of this business. It's part of doing business. And you need to use an attorney for some things, because if you don't, you could lose all your money. Don't you want to protect your investment? Right? There are some states where you don't need an attorney, but Indiana is one of those, but those states don't pay as much either. Okay. And those states, typically the redeemable deed, except for Georgia, but the redeemable deed states, you wait a year, and then if it doesn't redeem, you get the property. All right, but it's all relative. It's all relative. And I really think the best place to start is in your own backyard, where you understand the property values. Okay. Yeah, you guys have to get started. You guys have to get you got to get some skin in the game, and you got to get started. You got to get started. And look, if you want to get started now, join the Tax Lien Profits Accelerator. It's $14.95 for the whole year. $1,495 for the whole year. If you don't want to pay for the whole year, it's $165 a month. You get access to tax sale finders. You don't get access to the Done With You trainings, okay? Those are the only trainings that I have that you don't get access to. You get access to a lot of my courses. You get access to all my workshops. And I've got workshops on some states too. The workshops are shorter than the Done With You trainings typically span 4 weeks at least. Some of them span 6 or 8 weeks. Okay, and they're while the tax sales are going on. The workshops are usually just 1 to 3 days. With the Done With You trainings, you actually get to look over my shoulder and we get to invest while these tax sales are going on. With the workshops, I show you where everything is and how to do it, and you're on your own. Okay. But they're included in the membership. All right. And Diva, what do you mean, as long as the homeowner can't find me? They have to go through the tax collector in most states. In most states, they as a matter of fact, for one of my liens, the homeowner actually contacted me. And this was from one of the cities in New York. They somehow got my information and contacted me. They were not supposed to be given that information. But when they went to pay their, and I'm not going to give you the details anyway, but I just called the tax collector, and the tax collector said, oh no, they have to contact me. So all I did was say, well, I don't know. What they told me was, oh, I understand you paid my taxes. I want to pay you back. I said, well, I don't know if I paid your taxes or not. You have to contact the tax collector and find out exactly what you owe. And that's what they did. Yeah, they're really not supposed to contact you. And they really even shouldn't. The only reason why they got my name is somebody who wasn't supposed to give it to them did. Somebody they paid their taxes to, but it wasn't the tax collector. It was like the school tax person for that district or something like that. It is public knowledge, though, that if you have a lien on somebody's property, that is public information. All right. Ray says, if you're serious about investing in tax liens or tax deeds, these are very reasonable prices for an entire year. And the option of doing monthly, and Joanne is obviously doing it. And thank you, Ray. And Ray knows because he's an experienced investor. Thank you. Okay. Okay. Diva's saying regarding investing in your own backyard. They really can't contact you directly. They have to go through the tax collector. So, that's not a concern. It's not a concern for me. I have never worried about it. And I did invest in my own backyard, but not when I lived here in Pennsylvania, when I lived in New Jersey. I mean, because that's where I started, in the county that I lived in and other counties around me, right? And I didn't do that here too. Even in Pennsylvania, I did invest in this county. I did buy a tax lien in this county, but I mean tax deed. This is a deed state. But I will tell you, it was on vacant land. So nobody lived in that. There was no house that somebody was living in. And a lot of, some of the properties I invest in are vacant houses. Not all of them, but some of them are. Okay. All right, so any other questions before we wrap this up? I do have a call at 3 p.m. today Eastern which is in 15 minutes. But again, highly recommend to become a yearly member before we close the doors, or at least a monthly member before we close the doors. So if you go to taxlienlady.com/membership, you could find out more. And yeah, and don't forget the newsletter. We put the link in there for the newsletter. We have a webinar tomorrow night that you could come to free to the live webinar. You need to be a member in order to get the recordings, but you can come free to the live webinar we're doing tomorrow night. This webinar is really for people who have money to invest. It's an opportunity to get in at the ground level and invest in land before it's developed. Okay, and I have a guest that's going to be doing the webinar tomorrow night. And then we have a webinar next week, next Thursday, it's the 21st, tax sale success webinar. And there is a link to register for that in the newsletter. So get the newsletter. Okay, guys? And you're very welcome. Diva, you're very welcome, and everybody else. We're going to be doing this again next week at 2 p.m. Eastern time, so I will see you then. Bye. Don't forget, go to Investing for Success. Go to the Facebook group, Investing for Success Facebook group, and watch the replays before we take them down of the Ride the Waves 5-day challenge. Bye, everybody.